Hi, my name is Liz Scott, and welcome to one of our monthly discussions where we have a roundtable. And in this last month's roundtable, we talked about where did my money go? And it's a really fun conversation. I love having it every single time, so I never get tired of answering where did it go. It's like solving a puzzle every single time, and being able to solve the mystery is putting the pieces together, and there's always a story there. And so what's your story? What is it that you do, and how do you spend your money in order to make your living? And so being able to piece it all together, and then in the end results go, look at what you created and look what you did, and you're providing for your family, and how can we do even better? So that's the whole reason that you're doing what you're doing, right? Is you want to be able to provide for your family or for yourself and eventually one day retire. So in order to be able to be successful, you kind of need to understand what it is that you're doing. So let me go ahead and share with you what we, inside of Accounting Lifeline, we have is this really nice monthly meeting where we get together as entrepreneurs and share ideas with each other. And this month was all about decoding the financial statements. Oh, just super exciting, super fun stuff. So I'm Liz Scott, and my firm, we do these monthly roundtable discussions, and I usually bring to the table some type of topic just like this, and then open it up for discussion, and it's really just interesting to see where the conversation goes, because these are really relevant conversation talking points to everybody. So you're welcome to join our monthly roundtable at any point. So understanding your financial statements, first you have to understand some of the basic financial statements that are made up in that packet. So the balance sheet, the profit and loss, the cash flow statement, and then budgets. And budgets I put in here because they're so nice to be able to say, if I needed to, where could I cut back? And if I needed to, where could I ramp up? And so it kind of gives you an idea of, it's not quite forecasting, it's not quite going, okay, financial modeling. It's like the next thing to do to be able to say, all right, I think I want to start planning for my future. What could it look like? So lots of people are really confused by their numbers that they're paying tax on. You're not alone. This is a really, really common thing. So oftentimes, you walk into your tax accountant and you say, here's my bank statements, and then they say, okay, well, here's your tax bill, and off you go. But that's not true understanding, and that's not having ownership of your numbers in order to be able to manage your business. So the thing that I like doing is taking that story and saying, all right, so why did you go into business? What is it that you're wanting to accomplish? Is that still true today? Did things pivot? Did you shift? There's a really good book, Who Moved My Cheese? Did your cheese move? And now, maybe you've been in business 20 years and you started off making maybe some type of manufactured goods, and now you've had to shift gears and make something different. Or maybe you started selling inside of a brick and mortar store and now you're selling online. So did you pivot? Did things change? So what is your story? Who are you selling to? And this is the number one question right here. Where did my money go? You say, this is the money that I made off of my profit and loss. We go and we look at your net income, and we look at the bottom line in your profit and loss, and you look at it and you go, I can't possibly have made that much money. And we say, oh, yes, you did. And here, now you get to pay taxes on that. And it's really confusing because you don't feel like you have that money in your wallet. In fact, you feel like this. And so, the answer that we get is like, you got to be kidding me. It has to be wrong. Explain it to me. Well, so that's kind of what this is all about, is that explanation. So life is business. Business is life. So whenever we think about, our businesses are very organic. A lot of us as entrepreneurs, they kind of mix together. So I like it whenever my business is in check and in its place and not running my family. That's the nice way to live your life. But that business is part of that greater family. And sometimes it spends money on the family, and so off goes some of that business money. And then sometimes the opposite's true. Your business is having a hard time, and so the family sprinkles money onto the business. So money goes in and out of that business, and making sure that you keep track of How much of it do you need in order for your family to survive? How much personal money do you need for your business to provide to you? So that's a number one question that I like to ask is, do you know what it is that your budget is, your personal budget is, in order to be able to go back and look at the business and say, this is what I need my business to provide for my family? So whenever we first kind of start off there, and then we start looking at, all right, let's read our financial statements. Let's start going through and looking at those stories. And so if you say, all right, we kind of have the standard package that we get. Sometimes whenever you get your financial statements from your tax accountant, all you get is just the balance sheet and the profit and loss. It's pretty just basic. That's very standard, very normal, very standard. But inside of your balance sheet, that's all about what you own and who you owe. And then left over from that, okay, those are your assets and your equity. The opposite is true, or a different story is being told on the profit and loss. So this is all about a time period slice. So maybe it's a 2019 or a 2020 profit and loss. And you can say, for this year, I've made to year to date X amount of income. So that has nothing to do with what I owe and who owes me. It has everything to do about what it is that I have brought in as income. And so you could have receivables. Those receivables are going to live over here in your balance sheet. But over here on your profit and loss, it's the income, it's the expenses that it costs you to run the business, and what's left over is your net profit. So there's two different stories that are happening here, and that's why there's two different statements to be able to represent what's happening. And then you also have your cash flow statement. So this is all about the money that's moving around, and I'll get into that one in just a little bit because that one's fun too. So balance sheet. So you go out into the world, and this is the place that you have to put your money. Whenever you make money, you got to put the money somewhere. So you go out and you make your money, and you got to put it into the bank. Well, now you own that money. So that goes on your balance sheet. It's yours. And then you, lo and behold, you go acquire some debt. You go and spend some money. So now you have some credit card debt. So now you owe the world. So then you get some credit cards, and then you owe the world again. And eventually you start saying, uh-oh, I only had so many dollars that I brought in, and I got so many credit card bills and so many cars, and maybe I'm a little in over my head. So that's whenever you kind of go, does my income justify as many liabilities as I have? So that's where you start kind of making some decisions as to what it is that you're doing. So here's a real balance sheet. And so if you're looking at a real balance sheet, here's the checking account. You come over here and you say, here's my vehicles, my credit cards, and then I've got my debt on my vehicles. And then I've got my credit cards that are being paid down as well. And then also my owner equity. And if I was looking at a more of a slice of time, I could actually look at this compared to my 2018 numbers or my 2020 numbers. And I would be able to see, it's possible that some of this net income right here that I was thinking, I'm going to take that money and maybe 128,000 of it and take it home and put it in my pocket. But maybe some of it actually throughout the year went to pay for debt that I acquired in another year. So maybe this credit card debt that's sitting here, that's really large. Maybe this is a brand new business. And so they're paying credit card debt from years that were prior. So that's another place that your money can go. So you always compare prior years. You look to see, do your loan statement balances look different? Your credit card year ends, have you paid that down throughout the year? That's another place that your income goes. So that net income, whenever you're looking at an empty wallet, where did it go? It went home to your family. It went to go pay for expenses, and it went to go pay for old debt. So if you look over here at the profit and loss, you go, here's my sales, here's the cost of doing those sales, and then here's my overhead expenses. So maybe if you are in the type of business that you sell things online, so you got to go out and you got to buy the stuff in order to sell it online. And here's the stuff that you bought in order to be able to sell the goods online. And then over here is your electricity. This is your telephone expenses. This is maybe your insurance could be over here in these expenses. So this is the way that you would be able to say, this is the difference between the two reports. This is the activity that the business has in order to make the money. It has to buy some things, and then it has overhead expenses. So an example of what that would look like. So this is the same business. So here's the sales that it had. Here's the cost of goods sold. So here's the money that it had to spend in order to make those dollars. And then here's all the other things that it had to spend. So repairs, office supplies, some payroll. That's a biggest one. That's like where the majority of our dollars go in a business, is spending money on the people. And then down here, you can see this is our net income. And you end the year going, I just don't feel like I made that much money. But it's because you've used it at different intervals. You've maybe taken it home in draws and used it on those pieces of debt. So right here, you can see on your balance sheet, the net income line, and over here on your profit and loss, the net income line are identical. They should always be identical. These two numbers should always tie into each other. But over here, you can see here's an explanation saying that net income went to go pay down some debt on those vehicles, on the credit cards. Hopefully that's kind of a nice explanation as to what the difference is between those two statements. And then you also have your cash flow statement. And so the cash flow statement is really fun to be able to say, this used to be a very easy thing to track. Cash flow used to be, all right, at the end of the day, maybe your little old-timey grocery store, the sales came in, you had a little money 10, and at the end of the day, the money 10 had some dollars in it, and you go, yay, I made some money. And then you go, all right, so I'm going to put my little money 10 aside, and that's your profit. And then somebody came in and said, all right, I need you to pay for me to wash the windows. And you go, okay, so you got your little money 10 out, and you said, I have money to pay you, good news. And so you got out some cash and you gave it to him. Now it's really hard to track because your cash flow isn't as easy to see anymore. Now instead what you've got is electronic dollars. And those electronic dollars are harder to keep track of because you're taking in electronic dollars and then you're paying out electronic dollars. And so there's a time delay there. And that's if people pay you on time. That's if you've got somebody who's a no pay at all, well then, then you've got an empty 10. And so then it's difficult to pay those debts. And if you've got credit card debt too, then, it's really hard to keep track of it. So that's where, the old system, the 10 and the good old days, that's no more. Now we've got all this electronic money floating around. So here's another slice or another way to look at it. So you didn't keep all your profits. So you had all this revenue and you spent some of it on debt. And you're left with sometimes feeling kind of like this. And this is what you don't want. This is why we start creating budgets. Is in a budget you say, all right, here's your income. Here's all your different types of sales. And here's all of your expenses. You don't want your teeter-totter to go the wrong way. So if you create these budgets, you can start expecting, this is what my day and my life of my business is going to look like. I'm going to budget so that way my expenses are always less than my income and I'm saving money up. That's a good time. And those budgets are really designed to help you through hard times. So how little can you actually live off of? So I like to always start with, like I said, building the family budget first, because I really believe that the businesses are here to serve us. So first build the family budget and then come back and say, Liz, here's what our family needs to survive off of. Family of one, it doesn't matter. You still need to be able to say I have to eat, I have to pay for my housing, whatever it is. So this is what I need to survive off of. And so we know that the business must at least provide that. And then we hope so much more, but at least that gives us a starting point. And then we can go in, we can start saying, let's make business budgets. And so we can go in and we can create a budget and plop in how many sales do we want? Do we want to build off of last year's numbers? Do we want to say how much do we expect our cost of goods sold to cost us? And then we can go and pull in some reports and we can look at budgets versus actuals. And we can see some numbers here. We can say we expected to have, $275 in fountain garden sales. And we actually had 951, and then we had all of these other things that happened too. And at the end of the day, we ended up making more money than what we expected. And so we ended up having more money in actual life than what we budgeted for. That's a good thing. That's a great day. So it's really fun to be able to go back through and look at these budgets and see what can we accomplish. And then once a month, review them, because these are a living work. And so you're constantly, especially in the very beginning, you're constantly going, okay, was that a little too aggressive? Was I a little excited about this budget thing? And so now it's time to go, all right, let's simmer down and maybe make a budget that's maybe a little more realistic. So if you'd like to join us, we'd love to have you at the roundtable. If you'd like to just get connected and start with maybe some basic, let's clean up the books, let's clean up some of the processes. And if you'd like to look at what it might entail to be a monthly reoccurring client, that's one of those things that we also do. So if you've got questions about our services, if you've got questions about the things that we do, you're welcome to go and check us out online. Until next time, bye everyone.